So the first is the farm transition of a daily decision making. Two observations that I've always made was when you see families that are playing together on the weekend, up at the lake, golfing, whatever, I can just about guarantee you that it is the kids making the daily decisions, not the parents. I think there's a resentment when the children do not have that opportunity. So I observed that, and so that was our goal very quickly. And most of the time, the next generation will take your farm to a higher level than what you took. And I think that's a great thing. We made it very clear that we weren't looking for employees to come back to the farm. We wanted them to come back and enjoy the farm business. When our oldest son came home, it was a total surprise. We thought he was going to be in the cities, working with Target stores. We told him our goal was that within 7 years that you're making the daily decisions. Now, for someone that's 22 or 23, 7 years maybe seem like a long time, but you have to go through enough years of experiences. So that's what we told him. Glad to say that he really did that in about 5 years, where he was making the daily decisions. He's kind of got an accounting mind. He manages the employees, so that's his part of the farm, as well as obviously working on farm. When our second son came home, the one who always wanted a farm, I asked our oldest, how is this going to work? He's coming home 4 years after you did, and he instantly said, he will come in as my equal. The 4 years means nothing. We need him on this farm. He has a totally different set of skills. He's the mechanic. He's the fabricator. And so that really helped that transition. And then our son-in-law, when his parents decided to retire from farm, and asked if he could farm his family's farm with us. Now, he's also an agronomist and seed and fertilizer sales. So he is somewhat part-time, although he farms well over 1,000 acres. So we started going to a counselor before any of the kids come back. We started going to meetings and hearing the stories of how you bring back people. And I think that was important. So we got it set up on a good basis right up front. The first few years, we would take husbands and wives, and my wife and I, and we'd go and spend the day with the counselor. This is a counselor that pays, or that we have to pay. This isn't, he's trying to sell us anything. I think that was important to us. And so he would sit down with Karen and I, we'd bring the whole family together, and then he would sit down with each of the adult children for an hour, hour and a half, and what they discussed was their business, and then he would bring us all back together. And those were just excellent. I think that really helped a good foundation for our family farm. Today, we have at least once a year a family meeting where we really sit down, try to do that in winter time when nobody's under any stress from harvest or anything like that. And that goes well, although Karen and I still go back to this counselor because we're transitioning towards retirement. We set it up so each of our children have their own individual farms. Now, we all work together. You couldn't tell their farm from ours. But when it comes to selling the grain, to making a decision what's planted, they each have their own individual farm. We never buy a piece of equipment together. If someone eventually wants to leave, we don't have to negotiate what things are worth. It's always kept separate. It's all put into a matrix. We sit down and decide what pieces of equipment we need. If they want to buy it, they put it into the matrix at a price. And then if nobody wants to buy it, then I have the privilege of buying it. So that's the way that works. We commingle grain because obviously you can't have that many acres of corn and dry it and try to keep it all separate. But it all gets figured back by percentage, by how wet the corn went in. And we're usually within 0.5%. And it's truly trued up at the end of every year. Things like liquids, so semi-loads of fuel, propane and that, one of us will buy it, and then that is figured in the matrix and it comes back out at the end of the year. Where we live, we feel that they need to have about 1,000 to 1,200 tillable acres to have an opportunity to raise a family as a minimum. If they didn't have that, then they had to either have a part-time job, or if we had the need for labor, we would pay them. When they hit 1,000 acres, then we felt they were full-time. And I think that served us well. That'll be different in every area. You got to figure out what works in your particular area. We encouraged them to purchase land. We had equipment. We didn't give them equipment, but we we had on a very nominal price on what it costs for them to use our equipment. And we encouraged them to, as a piece of land come up that they thought they could afford, to purchase that land so that they were building equity. We don't like to co-sign for them because I think they get a better credit rating if our name is on it. We actually separated all of our land into separate pieces, and we will allow them to use that as collateral. So if they're purchasing 2 quarters, we will give them a quarter of our collateral, still our land, but the bank has that for collateral. That way we keep our name off. And I think this has served us very well. A good friend of mine from down in Iowa once told me that, and he farmed with a very diversified family. Yes, farming is a business, but once in a while you have to make a decision by family, not necessarily by business, because you do want to see those grandkids at the end of the day. You can't do that if everybody is mad. So our second transition, which we're kind of in right now, is a transition towards retirement. We'll probably never fully retire as long as we're healthy. There are some tax reasons why maybe you want to keep a small piece, but overall, I think that, you know, there is a time when you should retire. We'll still drive equipment as long as we physically can, but I think it's time that we turn that over to them. I see a mistake where many people don't turn over the decision making. They turn over all the debt and all the work, but they still want to make a decision. I see that as a big mistake. That's got to be theirs. I've had people tell me that you need to be out of debt if you're going to fully retire. And if that requires you to buy or to sell a piece of ground, so be it. Be out of debt and start planning early. I think we started about 3 years ago, especially tax wise, and we still are working at that. And then the final, obviously, is transition at your death or at your passing. We have a very good will, a very complete will. We do a new will every 7 years. And I was joking with my wife this morning, why do we do it every 7 years? Well, we're like everybody else. At about 5 years, we start thinking, well, we should probably redo our will, things change. And then we think about it for a while and put it off by 7 years. No, we need to do it. So that's where the 7 years comes from. Most children will respect what you have in the will. They don't always agree, but I very seldom have talked to someone that if their parents really put good thought into it and it was a recent will, that they will think that it was wrong. Our children know that we have a very complete will. They know when we update. We don't tell them everything that's in it because things change, and as you changes, you need to move things around. The one thing that we did tell them, our sons come to us one winter and asked if they could buy life insurance on us if we'd be offended. And I said, well, no, you can buy it if you like, but that is very expensive. Well, they knew right to the penny what it would cost. And I said, I'm just curious, why do you want to do that? Well, you own the majority of the equipment, and if something happens to you and mom, how do we buy that out? We don't have the collateral. And so then I explained to them in the will that it would be appraised by a named appraiser in the will. Of course, the 3 that are actively farming would get 25%, and the 4th that is actively farming North Dakota would want no interest in ours. They would have a loan to him on the appraised value for 5 years at a set interest rate. So don't leave those things up in the air for them to argue about. Just if you put it in there, although you cannot rule from the grave, obviously there are some things you can definitely do. I think it's one of the greatest gifts you can give your children is a good will. It will help keep your family together. The one up in North Dakota is one we worry about, and he tells us not to worry about it, but because we're helping our children now who are actively farming, he does not get as much. He said, don't worry about it. I'm up there. It'll be the same way where I'm at. About 8 years ago, we did have the farm site, the main farm site that's important to that farm, plotted off. And so that makes it easy in the will that that site would go to the, obviously the active farmers. The machinery would be appraised, the named appraiser. The grain would be divided equally if we were something happening to her and I right now. And prepaid expenses, things in the ground, you can have $1 million with stuff in the ground or prepaid pretty easy this time of the year. So all of that is laid out very well in our will, rather than to just leave it up to whatever happens. I think it's a great gift when you do that for your children. Our house, all of our children have their own homes, so we plotted off a 5-acre house so they could easily sell that if they wanted to. Just decisions like that. And the last thing is, I think kind of a mark of our family is there's 22 of us, and we have a very nice lake cabin about 35 miles away. We work together all week, and 22 of us live together in that lake cabin on the weekends in the summertime. And I think that says something about our family. So that's the last thing that we did, is this lake cabin, along with 80 acres of land, will go into a trust at our passing. The land will pay all the bills, so the kids don't have to dig in their pockets to continue to join that family unit. And that's kind of our story.
That's great. Thank you, Bob, for sharing that process that you've gone through with your transition. I really appreciate your 3 points of the transitioning daily decisions, transitioning to retirement, and then the transition at death. Clearly, those are some, I think we'll see as we continue to go through this panel that everybody's going to be different. Every family operation, every business is somewhat different, but there's probably some foundational principles that we all need to follow, and kind of keeping in mind that the estate is different than transitioning the daily decisions. And so I think, as we kind of keep in mind to break those things down, and then again, I appreciate it. Sounds like you've had a lot of really open, honest communication. And I think no matter what we do in life, our own personal relationships with our spouse, I mean, you've got to have open, honest communication, or things just aren't going to work. So I think that's great. That's great. Brian and Nick, do you want to come follow, and maybe Brian start off, and then Nick, if you want to share your thoughts on your transitioning as well.
Sure. Thank you, Kim. Well, I'm going to go back. Graduated from college in 1987 from SDSU, always knowing I was going to come back to the farm, in which I did. And I got married to my wife, Brenda, in 1989. And we had 3 kids in the 1990s. Nicholas was our first. And then we have 2 daughters behind him. The 1990s were interesting, to say the least. Talk about transitioning. I didn't have any ownership in the operation at that time, but I did have 2 quarters of land that I was able to purchase in the 1970s and 80s with the help of my dad. That was actually his sister's land. And so by the time the mid 90s came about, that land was owned free and clear. And it became very beneficial getting into the partnership later on in the 2000s by being able to move that land into the partnership as equity, which really helped. But anyway, the 1990s were interesting in that my nephew Cody and Cody was graduating from college in 1993. In the mid 90s, there were some things that happened to both my brother and my father that forced them to leave the operation for a short period of time, about 1.5 years. And so Cody and I became the instant navigators of the ship. And we did a lot of changing. My mom was extremely strong, and she gave us a lot of confidence in that we could run the operation, which we did. And we made a lot of significant improvements in terms of employee relations, communications. We ran the business more like a business. And I think that set the foundation of where we are today in terms of how we structure the business and how we run it. We looked at it as not as a bad thing. We looked at it as an opportunity to grow and strengthen ourselves and our operation, in which we did. So we made a bad thing a good thing. And I guess as it turned out, it was a blessing. Everybody got back home. Everybody got back in the operation. And there were some adjustments for them as well. But as it turned out, everything worked out in the end. So